afternoon, David. In this week's Currency Countdown, we're going to get right into it, and we're going to talk about the euro. We're going to talk about the inevitable breakup, and I want you to kind of give me your overview on what's happening right now.
Well, I think a good analogy is some kind of sporting event where the hockey puck for the Canadians that are listening to us, it's going back and forth and back and forth and back and forth. I mean, this thing is getting so bizarre, you almost have to do an update minute by minute play. You've got Greece kind of at the center of it, then Italy pops up, and it's all going to happen because of the Italian situation. And then you got Spain in the background, Banco Santander, it's bankrupt. All these banks are bankrupt. There's really no way out of this thing. And it's, again, the word I like to use is systemic risk. And again, to explain it, it's just a fancy word to mean interconnectedness, and everything affects everything else. It's a game of dominoes where they're all lined up, and which one goes first, we don't know. Is it going to be Italy? Is it going to be Greece? Is it going to be something else? And once one of those dominoes hits the next one, it's a pretty much of a cascading event. Now, there has been noises made of the separation of the Eurozone. In other words, the northern countries from the southern countries. But at this point in time, again, it's a play-by-play. This thing's changing so fast, you have to be a sports announcer to keep on top of it. I think there's a great deal of concern. If this transatlantic region, the Eurozone, goes down or starts to unravel further, and I believe that it will, that is interconnected with the London banks and the United States banks as well. No one's talking about that, and we don't know exactly to what level, but enough of a level in some of the banks where it's going to cause problems across the board. So again, this is something that's bigger than the Eurozone. If you're thinking, well, I'm in the United States, it doesn't affect me, or I'm in London, it doesn't affect me. That's not true. It does.
Okay, well, let's talk about it then. Let me ask you, how is the Eurozone going to affect American banks, for instance? What are your thoughts on that?
Well, it depends on the banks. You got to look at an individual, case-by-case basis. But what you have to look at is how much debt some of these banks hold on their books. If that debt is, going to be paid or not. We already know if you're holding the Greek debt, you've got a 50% haircut. And then, of course, all these banks made these absolute no-lose bets. I can't lose. I got a credit default swap. I've got insurance that if this sovereign country defaults, then I will get paid on this side bet that I made. The problem with that is that these credit default swaps are not valid in not that they're not valid, they cannot be paid. And so you've got this insurance policy with an insurance company, and you've got a $100,000 policy with them, and yet the total liquidity of that insurance company is $10,000. Obviously, they can't pay the $100,000 they owe you if you want to collect. That's the situation, Tracy. Again, it's not across the board in the United States. You'd have to look on the books. And again, looking at the books in today's age, so many of these things were offshore or held in separate accounts, or they put their toxic waste assets in a different location. I mean, you have to be like, excuse me, a Sherlock Holmes financial analyst with 2 microscopes and vocabulary that's beyond belief to be able to decipher some of this stuff, because it's not well shown on the books. It's on these off-book entities that don't really appear very plain if you're just going to go through the financial statements.
Okay, well, this is very interesting to me, and something that I noticed in the news this last week. A lot of Italian investors, in trying to cope, were all running to the bond market. I just want to ask you about that specific financial instrument and what you anticipate happening to the bond market in the short term.
Well, in the short term, probably strength, but I agree with Franz Pick, one of the Austrian school thinkers that is long deceased, but he called bonds certificates of guaranteed confiscation. And they really are, especially in today's age. So long term, I'm bearish on the bond market, and that's the area that I've stressed even in my work, even though I'm, precious metals oriented. But the big picture is what happens in the debt markets, and that means the bond markets across the board. And the biggest debtor of all, of course, is the United States. So really, there's a situation that we've talked about before, and I think it bears repeating. There's 2 things that can happen generally. One is you default, which means you default on your bonds, or you default on the currency. And that's why we've got such a great name for this show, Currency Countdown, because basically to me it implies that the governments of the world take your choice, Italy or the euro, it's a currency, the United States dollar, Canadian dollar, whatever you want. The US dollar is, of course, the prime one as the reserve asset. As we count down to this currency destruction, that's how I think the default will take place. I don't think that any country is going to come out exactly and say, hey, I'm defaulting on the bond, although that happened in Greece. I don't want to misspeak this. What I'm trying to say is overall, the political will isn't there to tell the truth and say, look, we got to take a 50% haircut on the U.S. bond or whatever it would be. They're just destroy the currency. So you're going to default on the currency instead of default on the debt. But indirectly, it's still a default, and it's still defaulting on the debt. If you look at what happened in Argentina, and they went through their situation not all that long ago, really, the banks didn't have a bank run per se, but in practical terms, they did. And the banks put up a limit on the amount of money you could get out on a weekly basis for a while. And it was a low amount. And so if you have a business and you need to, make good on, your bills that are due, and you're only allowed to draw so much out of your account, I mean, this puts huge hardships on people, and it really stalls out the economy. I'm not saying that's going to happen. What I am saying is that that's the direction that we're moving. How it's implemented, what takes place, where it's going to happen, who falls first, all that stuff is up for grabs. And again, I'll go back to the beginning. It's a minute-by-minute situation at this point.
So, David, how does this euro crisis, where are we at with gold and silver in the next, week or two?
I think we're steady to higher. With all that's going on, gold really should be making new highs. Silver probably as well, based on the fundamental facts that we have been discussing every other week. But they're not, and that's okay. What it really suggests is that gold probably got ahead of itself for a while, but there's more fundamental reasons to own gold and silver than there's ever been. So over time, they will make new highs. But for the short term, I think they're going to consolidate. There's really kind of a war going on, and what I mean by that is there's a huge vote, probably 98, 99% of the population that believes that, the bond market or holding cash is the safest thing you can do. And there's only maybe 1% of the population that knows that all currencies unbacked eventually unravel. That holds gold and silver. So the fact is you got a lot of, back and forth for a while. And that's what makes any market, of course.
Well, thank you for joining me again this week, David. And I'd like to direct everyone for more information to silverinvestor.com. Thank you, David.
My pleasure. Thank you.